Most people don't realize that the first lien HELOC is really driven off of cash flow. So the better that you are at saving your money and controlling what you can control, which is the amount of money you make and the money you have left over, it can help pay off this home in years instead of decades. Worrying about the interest rate and all the other things that most people are concerned over, you have zero control over that. This client is a perfect example. She's got 27 years left on her mortgage. We're paying it off in 2.5 years. She wants to get ready to help her son go off to college in 4 years. So we're not only are we getting rid of this mortgage debt, but it's going to put her in a position to then move to the mainland if she so chooses to follow him and at least be close as he's in college. Now she's got options because she doesn't have to sell her home. She can still maintain the residence, turn it into a rental, all while having the house completely paid off and having access to a $300,000 line of credit. Here's what her scenario looks like. We're going to pay off a $337,000 mortgage. Her house is worth $1.3 million. She's got a 30-year fixed mortgage at 5.75%. She's been in her current mortgage for about 3 years. Her take-home pay is about $15,000 a month, and she's got about $120,000 in a checking and savings account that we're going to deposit into the HELOC. Remember, the deposit is totally optional. We like to look at moving any idle cash into the line of credit. Unless you're making more money, investing it somewhere else, that's fine. Keep doing what you're doing. But if the money is sitting idle in a checking, savings, high yield account, not earning you any interest or very little, you want to move that money into the line of credit because the amount of interest you can save, which some of you don't care about saving interest, which blows my mind, you can save more than what you're making. If it makes sense to do that, move the cash and pay off the house. We're bringing in $15,000. We're going to pay off a car and another loan that she has. So at the end of the day, she's going to have roughly $6,400 left over after she pays all of her bills and her expenses. Again, this is her current mortgage, 27 years. We're going to pay that off in 2.5 years, 30 months, saving her $304,000 in interest. And for all of you that hate the idea of putting cash into the HELOC, your 3% money market account that you're getting in this case would have made her $3,600. But if we take this $304,000 in interest savings and we divide that by 2.5, we're saving $121,000 a year. So that $120,000 that gets deposited actually was made back in interest savings. And we still have access to the cash on the line of credit. So it's not like we spent the money and we can never touch it ever again. It's still there for us and accessible. And for all of you that are obsessed about interest rate, we're using the average of 7.4 on this loan, but we're outperforming the 5% mortgage. And because interest gets calculated on a daily basis, we're paying $23,000, which gives us an equivalent of 0.4%. She does a hell of a job controlling her expenses. Therefore, she can get out of a 27-year mortgage in 2.5 years. Instead of having to choose her bills or helping her son with his college education, she can do both. If you want to learn how to do this strategy or see if it works for your situation, send me a DM and I will do this exact same scenario. We can customize it for you to see if you can be one of these people that can pay off your home in a few years instead of being strapped for cash and being in debt to the bank for 30 years.